I want to talk about loss. I know a lot of traders have a problem with just about any trading strategy that's going to give them losses. The fact is that every trading strategy is going to have loss. And as I spoke about in a previous video, you can have a losing streak upwards of 13 trades in a row, which makes it vitally important that money management and how you position yourself risk-wise is going to make a huge difference on how you're going to end up in trading. Your trading setup is the least of your worries. Where you're going to get out when you're wrong, where you're going to get out when you're in profit, and how much you're going to risk. Those are the issues that most traders should be worried about. And I'm just going to look at PIPS Wizard Pro here. It could be any trading strategy. It doesn't really matter. But for the example that I want to talk about, we're going to use PIPS Wizard Pro. And this is the Euro US dollar. It's a daily chart. And we're going to look at swing trading, which I'm sure anyone who's listened to my videos enough know that I'm a big fan in not only just swing trading, but position trading, getting a position on, riding the trend, basically. Let's call it trend following. Why not? And I just want to show, here we are coming off of a downtrend in the euro near the end of 2016. And I'd go through all these trades, but most of these are all winners because we're only taking trades that come in favor of the trend. Okay, so most of these are all winners. And what happens when you have a market that goes from bullish to bearish or bearish to bullish, the trend, very rarely do you get a simple V reversal and then the trend just takes off. A lot of times what happens is you will get choppy price action. That's just what markets do. And you can see we get it in here. We got our low here. You can see what's going on in here. Okay. This is more of a, it's not so much choppy because you can actually trade inside of this. And we are still making, you can see here, this is a high here. This is a lower high. So price action here is still telling you that we're in a downtrend, even though our moving average is now sloped up. So if we just use a standard definition of trend, higher highs and higher lows, we have our high here, our lows. This is a high that did not take out this high yet. So we are still, as of this point, in a downtrend. So looking to short would make sense depending on what you're doing. And then we put in this higher swing high here. So when you have a market that looks like this, I'm sure anyone that trades price patterns can see this. This is a lot of times what you're going to get when trend is reversing from a downtrend to an uptrend and vice versa. Okay. And then we start putting in our proper trend structure here. But throughout this area here, if you're just using the moving average, this is only a 50 period moving average. And our rule for trend following will be if a trade sets up here and price is above our moving average, we can look for longs and vice versa for shorts. So over here, this moving average is still up. Price, when this sets up, does not break here, we don't short. Here, when this sets up here, price has not closed below our moving average, we don't take this short trade. Okay, so in this first month of the year, we don't get any trades. And then we come around here. We get our setup here. Price closes above our 50 period moving average. This is in March. So we went basically almost 3 months without a trade in the Euro US dollar on the daily chart. Okay. Let's just draw some lines here. So this is our trade setup right here. And we get in right here. You can get on the close. You can put orders to go above the highs. So let's just do that. Actually, you know what, to keep this more objective, I'm just going to go in on the closing price. Okay, this will show up, right? So let's just go on the closing price because we're just looking at a concept here. And you see we get in, price rallies 245 pips, falls back. Now, what is our exit rule going to be? Let's exit when price closes on the other side of the moving average. So you'd get out here and basically looking at a scratch trade. Now, as you get more experience in trading, you're going to look over here and you're going to see this area that could provide resistance. You're going to place your line on that area not exactly on the extreme inside of it. And you can see here, price tests it, breaks above. This is a reversal candle. I don't think anyone can say this is not a reversal kind of candle here. And then price falls back. So as you gain more experience, you're not going to be trading this just, blindly. You're going to see this kind of tip right here and get out. Okay, but for this example, we're not going to do that. So you see that the price, you basically got a break-even trade here. And then this is actually a short trade. So you could short on the close of this candle. So you're basically just reversed from this long to this short. And you can see that this price doesn't go anywhere. Yes, our moving average is flat, but there is a bit of a bend to it. So again, how are you going to define your trend? Is it a slope of the moving average? Because you can get moving averages that will change colors depending on the angle of the average. Or just to keep it simple, close above, close below, setups. That's it. So what happens is this trade comes around here. This candle closes above. So we're going to take a loss on this trade for about 80 pips. So right now, a lot of traders are going, wait a second. It's now April. 4 months, I've made no money, and I actually lost money in the Euro US dollar daily chart. PIPS Wizard Pro sucks, and they get rid of it. Okay. That's what we hear. Now, if you just trade it out of the box, you're going to trade, like it says in the box, in the PDF anyways, you're going to trade in the direction of the trend. You can have your own exits. For example, this you may not take because you're seeing it's more of a downtrend. This doesn't break above this. So you may take this short trade here and you get out when this blue candle, so you'd make about 77 pips there. Okay. And because we're still in our downtrend, and we put in this high here. So now we're going to be looking for, look for longs. I kind of lost track of what I was going to say. And so you'd maybe look at that way of defining trend. It depends on how you're defining trend. We're just going to use moving average for this example. But this is not about necessarily trading this strategy, but I was asked what I think was the best strategy for me, because I'm not scalping. If you were, obviously Infinity Scalper. I'm day trading. I don't day trade. So I don't need the extra profit targets that Rapid Trend Gainer gives you, which is actually really good for traders that have a problem with being objective. I swing trade. So if I was going to use one of these, I would use PIPS Wizard Pro, and I would slap on a moving average, and I would let this show me my entries, and I would just ride the trend. That's what I would do. Nice and simple. So traders frustrated. They didn't make any money. They actually lost money. And then we come around here. This candle closes above. That fits our criteria. And we have a setup. That's our criteria. And there's our entry price at 1.0723. And you can see that for the almost the entire year, well, let's be April to basically September 26th, this trade actually just ended, you would have put in a trade worth 1,064 pips minus your loss from earlier. So you didn't have any trades over here that really went anywhere, and you actually took a loss. And this is what happens. So traders have to remember, A, you're going to lose. B, you're going to go through periods where there's no trades. And C, these kind of moves happen in virtually every single market. And yes, you certainly could have added to positions here depending on your risk. For example, obviously this setup for the long side is still valid because we're above our moving average. So yes, you could scale in different positions here. Not so much scale in, because I don't scale in, I go in full position. But what you could do, and this is actually how you're going to make some better money in trading, not just hold on to one position, is when you get your setups. If you've taken the risk out of your original trade, let's say you risk 2% on this trade, trades in your favor, and you've locked in, a little bit of profit, or at the very least, you've taken all the risk out of that trade, and your position is still on. Now you've got an extra 2% you can put on to risk. That's your risk amount. So on these setups here, you would say, okay, well, you know what? I have no risk in my original trade. I'm going to take this trade, and vice versa. So what will happen is you will not pyramid in. I don't know what word I'm looking for, but you'll keep on adding to this trade, not the other position, because that position is already in, right? You're just going to keep on adding trade after trade after trade. As your risk is decreasing in your previous trades, you'll free up your risk, right? Remember, you got to have overall portfolio exposure percentage as well. Okay, so you don't want to risk, you know, I'm just putting this number out here, 20% of your overall account. You know, you don't want to have all more than that active in the market. So all through here, you can take all of these buy setups and just keep on compounding your positions over and over again. And this is what happens in trading. You know, you're going to take your losses. You're going to go through periods where the market is just not friendly. And the problem is, I've had people say, PIPS Wizard Pro is a scam. All these trading strategies are a scam. And they're not. People think that that trading is easy. You can, you know, pay $87 for this, and you know that's all you got to do. Just follow all the signals. No, not at all. Not at all. These are going to give you your setup, and the PDF is going to give you some training on, you know, profit targets and stops. Rapid Trend Gainer is actually going to give you your profit targets and your stops dynamically, depending on how the market's moving. But for everybody that says, these are garbage, these are crap, no, the way you're trading them is crap. You're failing because you're failing, not the strategy. You're failing because you're probably not sticking to the rules. You're risking too much money. Your stops are too tight. You're just trading these blindly. You're trading in chop. You don't understand some of the basics of trading. You're knee-jerking into trades. If you have not read Mark Douglas's trading book called Trading in the Zone, get that. That'll help. What PIPS Wizard does, or any of these strategies, is it's going to give you your setup. And if there's websites out there that all they do is talk about trading setups, well, trading setups are the easy part, right? It's the other stuff that's hard. And this will give you your trading setup. It's going to take that subjectivity out of, should I enter here? Should I enter here? It's going to take that out of your hands. And it's going to put it on the computer screen. You will see it, and you take it, or you don't. It's up to you how you trade these. But these strategies do their job. What's not doing their job is the trader themselves. And I say trader quotes with quotes, because just because you place a trade does not mean you're a trader. Those stats where most traders lose, quote, traders, most people are not traders. Most people are tire kickers. Most people are here looking for a quick buck. And that's just not the way it works. So of those numbers that you hear that most traders fail, I'm going to say most people fail. But I think a lot of traders do very well. The ones that are approaching this with a professional mindset and are not looking at this as an easy road to riches, because it isn't. You're going to get beat up. You know, if you're in this long trade here, for example, and you're seeing price pull back, you know, some traders will look at this and go, it's a reversal. Look at this, is rejection off of support. I got a short. Well, people do that, right? People do that. Or they'll see this. Well, I'm up here. There's a swing high. Oh, no, I put in a swing low. Let me short this. Let me short this. Now, these trades can actually work out very, very well. These things here, in context. This red candlestick takes me out of this. It's called a failure testifies. It's a Wyckoff thing. Anyways, that's it. Let's wrap this up. Pick up PIPS Wizard Pro. You know, give this a shot. This is a very simple way of trading. And before anyone asks, this is a 50-period exponential moving average. I'll switch them around. It doesn't matter what I use. SMA, EMA, doesn't really matter. Doesn't matter. If I'm looking for longer term trades, I'm going to be looking at something at 50 or 100. You can certainly look at 200, but you know, that takes a different kind of mindset to watch the price retrace against you and the trend still being valid. Anyways, thanks for watching.